Good day. Ira Epstein of Linn Associates with your agriculture wrap-up, and this is for Wednesday, the 18th of December, 2019. Of course, this is impeachment day, and we've been watching hours of everybody getting on record, if you will, each congressman getting his 1.5, 2 minutes of say so that he gets on record, and then we should have the vote later today. And if you were watching Lindsey Graham today, and he's pretty important because he is the chair of the Senate Judiciary Committee, he is saying there's no witnesses coming or anything else. So I just mention it because it gets so interesting. Now, we've been having discussions in our office on the ag market, trying to figure out how does China possibly get up to from a peak of, say, 28 billion or so purchases to near 50 billion. We're wondering, it could be milo, some silage, I guess, used for drinking. It could be some byproducts that come from ethanol, because as you take down that corn, you do get the DGE that's left. So there are items like that that we could do. What I don't know is the quantities we have, and I'm always bothered by the fact that China's heavily invested and investing, two parts to it, in South American ports and so on to keep their supply chains open. I don't get it, and that's, I think, why the details are so lacking. Today, the market down a little bit. There's nothing unusual about that. You've had almost a straight-up way on it. The question is, what next? So let's go to the charts and get a feel. On the weekly area of charts, area of closes only, we're up about 21 cents for the week. The market's running into a bit of problem at these old highs. That should not be something you're not ready for. That is a high peak. You came down. Now the question is, can you do anything with that peak? And as you can see, this market's up on a stilt. Markets, they can run, but you're into, and I pointed this out to you just this week. I said, if you go back here and you start looking at these layers where the market was going sideways, you've come right into the bottom of that layer, so you're getting into what I call a natural resistance area. That's not bearish, that's a resistance area. There's a difference. The trend is certainly to the upside, where you've got higher lows and higher highs. You can see that the 18-day average is now swishing around, trying to make a run towards that 100-day. It's only 12 cents away. And the market is going up about a penny a day. That's what I'm just trying to show you. So, you know, that's towards the new year. If it just kept going at this rate, we'll see what happens. What about resistance? We're there. The first challenge of a Bollinger Band, you can sometimes get through it, but the market often fights in that zone. So I think that is what you're doing, and you are overbought. So what I have is a market that's entered a resistance zone. The trend is certainly to the upside. It's hit this area and running into a struggle for the near term. We'll see what it does next. Pullbacks in the market, I would not be surprised if you did pull back that the 920 area becomes the support. That is 20 cents away, but the 100-day average looks like it might offer that on the way down. If we take a look at the next chart, which is the meal market, you're into a key resistance area. You've got up to the 100-day average and the upper Bollinger Band, and that in an overbought condition, which you have, should be something of a resistance zone. Now, one of the things we're wondering is, has this market made a more important low than we give it some credit for? You know, at the end of the day, once we know more about the Chinese purchases, meal's very important. Now, China typically doesn't import meal from us. They'll take the cargo of beans, they'll do their own crushing there, and then they've got the meal. But if they're going to rebuild herds of animals and so on, well, it takes time. They don't have as many animals right now, but as they start and push their farmers and give them guarantees that if animals die, they're covered in some way, it could turn out to be a surprise market. The real bull market has been the soy oil. And this has been the run in the market. All you did now, and I want to show this, you had this day over the upper Bollinger Band, 2 days over the upper Bollinger Band, 3 days over the band, 4 days over the band. As I told you, 5 is a difficult number. You can get there. Getting to that 6th, very hard. So to see the market pull back a little, you should not be surprised. What I like is you have an embedded reading, so on breaks, I'm expecting somewhere in there to see the pros step in and continue their buying mode. Plain English, I don't see this market having topped out. I can call for pullbacks, but that's what I'm seeing in it. In the corn, if you do nothing else, I want to show you, here's the upper Bollinger Band. This is Monday's action. The next resistance, I'm sure I would have said it, could be the combination of the Bollinger Band, 100-day average. You got there and now you're just paying attention to it. That's what's going on. Market is overbought, has hit a key resistance area. Can it build on that or not? We're in holiday type trade already. The volumes are dropping everywhere that I'm looking. And as I said yesterday, sometimes waiting to see quotes is like looking at paint dry on the wall. It's not the easiest thing. And this is our last full week of trading. Just think about it. Today's the 18th. So Christmas Day is the 25th, 1 week away. In the March wheat, you got 2 days over the upper band, pulling back, overbought. I think the pros took some money off the table right here. Would not be surprised to see more of a correction. But got to keep in the back of your mind, corrections are one thing. The bias when you're over the 18-day average keeps you with a bull market bias, or a bullish bias could be the better term. In the sugar, I'm wondering what's going on. I think the pros are selling the market here, trying to get back to the 18-day average with the lost embedded reading, but normally it doesn't go much more than this. If the market's up again tomorrow, the odds don't favor that occurring. It might be a miss again on it. But this market has been one of these markets that when it gets an embedded area or loses it, it typically gets back to that 18-day average. We'll see if it can do it. Coffee market, as I said, it just killed everybody the past 3 days. Today, another decline, minor, but extending from this upper part here in a correction mode. And the word is a correction mode. You still have the higher lows, the higher highs. You're over the 18-week average. It's still very much a bull market alive. And in cocoa, what we did is, here's the action on Monday. You have a market that's fighting at the 18-day average, starts its way down. This is yesterday. I'd look for support at the lower Bollinger Band and possibly even down to the 100-day average of closes, and that's what you're doing. Oversold. I don't know if the bears will be able to push it down there or not. I think the smart money began coming out today. In the cotton market, you still have the pattern of higher lows, higher highs. Now, today's action was interesting in that you have an outside day up. So you took out both the low and the high of Tuesday, closed higher. If you take out today's low, it'd be a pretty good signal to me, at least, that I'd look for the 18-day average to be hit. If it doesn't do that, it still has to correct an overbought condition. I don't see it embedding at this point, nowhere near it. So I wouldn't trust the rally in the market. In the cattle market, I still see this market as just wanting to pull back to the 18-day average of closes. We have a cattle on feed report coming up this week. I think the market's trying to get itself neutral to a degree going into it, but I'm still looking for the support there. And no, I don't see the end of this bull market. I don't see anything on that chart that says it. Same in the feeders. I think you ran into your first resistance, hitting this upper Bollinger Band, and from there, you've been slipping back. That's what I think's going on, but the trend is still up. Wouldn't be surprised if you want to get back to that 18-day average as you have an overbought condition with the momentum oscillator stochastics over the 70 level. And in the hog market, I'm pretty certain people are just wondering, if China needs all this pork, they're not buying it from the U.S. What's going on in this market? Well, the trend has been up, and you ran into that wall of the slow stochastic, not slow, I'm sorry, the Bollinger Band top, and my brain was ahead of my mouth, and you got overbought in the slow stochastic. So trend up at a resistance point, market needing something to move from, not quite getting it at this point. In the stock index, I'll finish up there. You can see it's a quiet day, pretty neutral on the day. Weren't able to build up or down, not a surprise, but think of it this way. This market just keeps making higher closes. Very, very important. And one of the things I watch when I'm, as an analyst, I want to know if a market's keeping its trend or losing it. There's an indicator that a lot of traders use called an Arun indicator. And if you learn how to use it, the idea behind it in its raw simplicity, and I've created a series of videos on it for you to learn from, is you're always looking, remember I used the word higher highs, higher lows? Well, it puts time and that relationship together. And it starts giving you an idea, is the trend going to fail? Or is the trend getting old? Or is it still got all the verve left in it that it should. In order to find out about this, it's simple. Go to our website. Under the free offers section on the bottom right, just click on it. Sign up for the Aruna Indicator. We'll send you out the link to the videos and away you go. You can also get it by clicking up here. If you're watching me on YouTube, it'll take you to that page as well. I'm Ira Epstein. You have a good day, and I will see you all tomorrow.